Welcome everybody to Financial Fix. This is the first month. Many of you have met me before, or I've had the pleasure to talk with you. My name is Nick Warren. I am the voice and the face behind the emails that you get, and I'm also for a living. I'm a family office coach. I'm an advisor for wealthy families, and what we're going to be doing is teaching you guys how to build your own family office. Now, a couple of things before we get started today. Most of the times when we have these meetings, we're going to start off with a little bit of Q&A time. So there's going to be some questions that'll probably come in from the previous month, and we'll answer those at the beginning. But this is the first topic, and so we're going to take advantage of all the time that we've got to get you guys up to speed on this first foremost thing, which is how to get control of your cash. Now, usually when we work with families, we don't have any kind of disclaimers or anything like that, but we had to do that. Our lawyer made us do it. So there's some little fine print on the screen. It basically says, I'm not a doctor, but I play one on TV. So there you go about that. And one more thing, we take questions throughout the whole thing. Now, there's a ton of people that are going to be on this call today. So welcome you not only to pipe up and ask a question, go off mute, but also use chat. Because it turns out I'm not the only person from ARC Financial on the call today. In fact, a lot of the other advisors from the family office are on. So if you got questions about anything that I'm talking about, or you have other questions that are specific to you, feel free to put it in the chat, and some of my buddies will be piping in to help out. And they may also be helping to answer some of the questions too. One last thing is just want to remind everybody that this is Shop Fix community. And so your questions are not private. If you ask a question out loud, everybody gets to hear it. And while we're not planning on being able to go real deep on one-on-one advice today, that's not our intention. Just be aware of the confidentiality, and just we're going to act like adults here and respect each other's information and who they are in their business and that kind of stuff. So, all right. So today is the first main topic that gets us into what we need for you to set up and build your family office, how to control your cash. Okay, so this is a fundamental thing, and a lot of people when they come to our firm, they're probably a lot like a lot of us, that they've just been figuring out along the way, and now they've got some new problems, and getting control of the cash is one of the first things. If you don't do this, you won't be able to do the stuff that's coming down the pipe at you in the next couple of months. Okay, so this is foundational. The second thing I want to bring up is that while you're attending today, and you're going to be getting about 90 minutes of stuff, actually 60 minutes of content, then we'll have Q&A at the end. You're going to have to put some time into this. Not a lot of time, because look, you guys are busy. You've got a business to run, and you're trying to also be in a family and a husband or a wife or brother or sister. But you're going to have to put a little bit of time in here on this, and I got a little bit of homework that you'll have to do before the next meeting. So with that being said, let's kind of jump into this. And I love Aaron's style. I got to see him on stage. I thought he was great. I'm just an Aaron wannabe, just I don't have the beard. So what I'm going to do is I'm actually going to start to draw. So you might want to change your screen layout so that you can see my drawings on paper. You know how Aaron always does that thing on stage with the camera where he draws? I love that. And so a lot of today's topic is actually going to be done on paper like this so that we can talk through it. All right. So let's just start off with some basic understanding of kind of how your economic universe is set up. So let me just mention that I used to run a business. And so I ran a construction business. Now I put a little engine on here because you guys do car stuff and that's really cool, but I did construction, all right? And when I ran my construction company, just to put this in perspective, me and my partner did about $700,000 the first year. And so that was profit. So I probably had a business that was split in two. What would happen is that I would take money out, I get my paycheck. And then when we were starting the business, things were oftentimes kind of slow and I didn't get the money. So I was like, oh crap, I just paid myself. Now I got to put it back in the business. So I got my paycheck. And then I had to put money back in. And then, hey, some months were really great. And I'd be like, oh, sweet. I got a big check this month, big bonus. Let me see if I can save some of that. I want to save it for my, whatever it is we were going to do. And then I'd be like, man, I got to buy some equipment. Where do I get that money from? Well, I'll just take it out of my savings, throw it over there. They're like, nah, now I'm going to go buy a truck. I did, by the way, buy a very nice truck. And by the way, what I coveted most in this was actually a really expensive set of leveling lasers. And so I went off and did that. And I was like, oh man, now I have to transfer money back. And my wife was mad at me. And then I got this big tax bill that totally took me by surprise. There was all this drama in my family. I got yelled at by my wife. I bounced checks. Man, all this stuff was going on in my life. And I don't know if any of you guys have ever been in a situation like that, but this is kind of the life of an entrepreneur, especially when you're getting started. There's all this money movement just back and forth and all this cash just flying around. And what happens is when you get into this mode, all you can think about is what is the thing right in front of me right now. And all your decisions start to become a yes or a no. Do I buy that equipment or not? Can I make payroll or not? And what this does is it forces you into a mindset that we want to break. And that's what we're going to be talking about today. So we're going to be talking about the methodologies to break this, the templates, the tools. It's the foundation of how wealthy people manage money. But the biggest thing that you have to change is the way that you think about cash. That's what we're going to be talking about today. And if I accomplish nothing else today, it's to get you to think differently about your cash. Now, some of you maybe have already seen this in your assessment. So, you can stop this craziness of this cash. And once you get to a certain point in your business, and you guys are there probably because you've got enough money to join Financial Fix, what you can start to do is get out of that craziness, and you can start to actually be strategic with your money because you've got enough. And we're going to teach you how to do that. And so what you can start to do is focus on how to protect yourself and protect your business. You can start to think about what is your purpose for every dollar that you earn in your business. And when you get those things done, you reap the rewards of getting peace. You no longer have to worry or think about where the money is. And what happens is that we're going to form a habit. That's what we're going to try to work towards. We're going to teach you the tools and techniques of how to build the habit of being strategic about your cash. And if you look at, many of you have done this assessment. This is that Excel spreadsheet that I sent out. You need to go through and do this and save this file because you need to look back at this in a couple of months because you're going to see how far you come. I took one of the typical assessments, and this is kind of the way it looks. There's a lot of red going on here. There's a lot of stuff. When you look at managing cash, if you don't manage your cash well, a lot of the other areas of your life are going to suffer. You don't do well in financial planning. You don't do well on tax planning. You can't manage your cash, and so you've got trouble worried about where the money is. You can't even start to build your long-term future with your wealth. So a score like this indicates oftentimes a problem managing cash. And so if you implement what you're going to learn today, and you get this work in your family, you're going to immediately notice that a lot of your scores will start to increase pretty quickly over time. All right, so that's what we're heading for today. That's what we're trying to do. We're trying to change the way we think about cash and think about differently about the money in our business and what we're going to do with it. Okay, so those of you who were with us at ShopFix, you remember that story that David told about that person's business that was worth $1 billion, and then it kind of crumbled overnight? Well, the reason is when you get to a certain size of your business, while you're still worried about growing it, you've kind of escalated yourself to a new level of problems. You got to think about protecting it. So I'm going to draw your business over here. So you've got your checking account. I'm going to draw just a couple of accounts in here just to give you a feel of what I'm talking about. So we've got a checking account. We've got a credit card. And you know what? I don't know what other accounts you've got. I just assume that you've got some other business accounts that you use to run your business. And then on the right side, I'm going to draw on your life, and specifically your lifestyle. Now, when I say lifestyle, I mean this is the money you use to live the way you want to live. How often you want to eat out, what kind of car you want to drive, what kind of house you want to live in. That's your lifestyle. And so over there, you've got your checking account, you've got your credit cards, and if you're anything like me, you got a mortgage still, maybe some other loans you got going on there. And if you just think about what I shared earlier about the cash in your life, you understand your business and you're accustomed to using that as your economic engine, which is great. But there's a lot of risk in your business. For example, what happens if you get hit with a big lawsuit? What happens if another COVID comes? There's all this risk in your business. And right now, you're keeping your cash probably in your business, except for your paycheck, because it's what you know and what you feel good about. But what you don't realize is there's something maybe out there that might hurt you. So the way to get a little bit more control of your cash is we're going to build in the middle of this whole thing, we're going to build an account that we call the family office account. Now, what is this thing? It's nothing more than a fancy checking account. You can't call up your bank and ask them to give you a family office account. They won't know what you're talking about. What you do is you open up another checking account and you get yourself a checkbook. The checkbook is key. This becomes a place for you to help manage your cash flow. And we're going to talk all about this account today and what it's useful for. Now, what's in this account? Well, the first thing is that you're going to deposit your paycheck into it. Your paycheck goes into this account, and then every month, you're going to transfer out how much you need for your lifestyle. We're going to talk a little bit more about that here in just a second. But there's a couple of other things in this account. We're also going to put in there a plan for our lumpy expenses. Now, this term, lumpy expenses, that's what my wife and I call it. These are all the things that you need to plan for in your life. I'll give you some examples of these in a minute, but these are the kinds of things that you don't want to be caught surprised by. A lumpy expense is not like a car payment. A lumpy expense is like your estimated taxes. It's a big enough number that if it surprises you, you're going to have a grumpy day. Also in this family office account, we're going to put our emergency funds. This is your personal emergency funds, not your business emergency funds. We'll talk about your business emergency funds here in a minute. All right, so we're going to teach you how to set up this family office account and make it work for you. Now, what this family office account does is it slows things down a little bit so that you get out of the mindset of, I need cash out of my business right now to do something in my personal life. What this does is it gives you a place, and we're going to show you the methodology of what it means to take money out of your business and move it into your lifestyle so that you can take care of yourself. And it starts to pull the money out of your business that is that risk part that I told you about. So that if something happens in your business, your family is still taken care of. And we haven't drawn this yet, but we're going to draw out your future as well. This is how you can invest in your future. So this family office account is really an important concept, and it's kind of new. In fact, it's kind of revolutionary, but it's just another checking account, and we call it the family office account. Now, let me help you understand how this works. Let's say out of your business, you're going to pay yourself $10,000 a month in your paycheck, okay? So that's your paycheck, 10 grand. And let's pretend hypothetically that to live your lifestyle, you need $9,000. Now, let's just pretend right now that these are the numbers. So if I go through a typical month, if I put $10,000 in my paycheck, instead of putting my paycheck into my checking account, I put it into my family office account, and I transfer out $9,000 into my checking account, I have some money left. Let's say I do it for 3 months. So 3 months times $10,000, $30,000 bucks. But I've transferred out 27 grand, right? So I've got $3,000 sitting in this account now. Well, that's a little bit of excess, okay? That's a good start. We're going to start to talk about what this excess looks like and how to use that as a way to make strategic decisions. So the first thing, and you understand how this works. So you got this intermediate account where you transfer money out of your business every month. It's your paycheck, and it goes into this business. So far, so good? Pretty straightforward, right? All right, now, your paycheck isn't the only way that you pay yourself, is it? In fact, it's the smallest of the ways that you pay yourself. What's the other way that you pay yourself? You take a draw. We're going to talk about the draws here in just a second. So you're going to take your paycheck and your draw, and you're going to transfer it into your family office account. Now, let's talk about draws for a second, and then we'll come back to this. All right, how do you pay yourself for owning a shop? You put in a lot of work, you take a lot of risk. The backbone of our economy. Well, the first is you get a paycheck, right? You're all taking a paycheck. And let's just say that that's monthly. Some of you might be doing it every 2 weeks or bi-weekly. That's fine, but it's a paycheck. The second way that you pay yourself is a draw. And you're going to start to do quarterly draws. You're working with us. We're going to tell you it's best to take quarterly draws. Now, why do we do quarterly draws? Let me hear from you. Go off mute if you have a reason that you do quarterly draws. Tell me, why do you do it?
Is it the
What are some of the
best,
reasons people are taking draws?
is it the best way to pull out any of your net, if you will, quarter by quarter, so that you have a good picture of what you should be able to pull out?
Well, the thing is, the question right now is, why should you take a draw from your business? The answer is you're pulling out the profit.
It's
That
not
profit's
taxed
yours.
it's not taxed like wages, correct?
That's right. Well, here's the deal. If you're an S corp or an LLC, which most of you guys are, and if you're as long as you're not a C corp, you pay money on the profit. You're supposed to pay that in your tax bill every quarter. You're probably paying it once a year right now. So you've already paid the taxes on the profit. That cash that's sitting in your business, you've already paid the taxes on it. The cash is in the wrong account.
Exactly.
You've already paid the taxes on that in your business. So all you're doing is you're pulling out your net profit, but that's not the biggest reason. Why do you need to take draws? What are the biggest reasons for taking draws?
To get the money out of your business in case anything goes wrong.
That's it. Get the money out. That's the reason right there. You're getting the money out because if something happens to your business, you get sued, someone else just grabbed that money and you just worked really hard and it's gone. You know, that story David shared about that business that got shut down, they got locked up by the bank. They couldn't even get the money out. That's your money and it's in the business. Now, the thing is, you're probably gotten really comfortable with the cash sitting in your business. By the way, if you're a C corp, you have to pay additional taxes on it. It's when you're an LLC and you tax it as a pass-through or a S corp, that you've already paid the taxes. If you're a C corp, it's different. But if you leave, you're probably gotten really comfortable having your cash sitting in your business and you think it's safe, but it's not. The cash is actually safer and protected more when you move it out of your business and you move it into your personal world. So you're getting the money out because you want to protect. Now, the official term for this is actually that we're rebalancing risk. Being a business owner is a pretty risky thing. And so what we're going to do is get that money out so that we can actually use it somewhere else to diversify the risk, because we want to put that money somewhere safe that you can get to it. Okay? So that's why we take a draw. Now, let's go back to, let's take a look at draws. You know, when we were down in Nashville, we got a lot of questions about this. People asked us, hey, how much should I take out of my business as a draw? Here's the thing. I'm going to teach you this. It's the wrong question. You shouldn't ask, how much should I take out? The real question is, how much should I leave in? That's the question. How much should I leave in? So here's how we're going to do that math. Okay. So you look at how much your business needs. And let's just say we're going to do it for 1 month. And then we're going to look at how much you have. Okay, so what does your business need to operate for a month? Well, let's just think through that. Well, what are your expenses for the month? Well, you got payroll. You got parts. You're either paying rent or you're doing a mortgage on your shop. I don't know, let's see. You're probably paying for some equipment. You got all these things. Most of you know how much you need for running your business in a typical month. You know what that is. And if you don't know what it is, you can figure it out pretty easily. So you know how much you need, and then you need a buffer. Because stuff goes wrong. Stuff breaks. People resign, and you got to figure out what to do. So we got a little buffer. Now, what do we have? Now, from a draw perspective, what we really care about is one thing: the king. Cash. How much cash you got? This is a pretty easy thing to figure out, isn't it, right? Now, if you can understand how much you need and how much you have, you can basically subtract the two and you get your excess. That's how much extra cash is sitting in your business that you don't need. Now, there's some nuance to this, and we'll go through that here in a minute. Now, the rules in the tax world say that you can take out the excess up to the owner's equity. Now, who knows where you can find what your owner's equity is? First of all, what is that? It's the sum of your profit that you've accumulated over time. You know, every month you're making profit. Where does that profit go? Well, it's a number that accumulates in the background. Where can you go to find your owner's equity? How do you find that out? Because you can't, your excess, you can take out your excess up to your owner's equity. You can't take out more than your owner's equity. You're not allowed to. Where do you find that?
The
On your
balance
balance
sheet.
sheet, isn't it?
Financial
You
report.
got it. You find that on your balance sheet. Now, let me just say something about balance sheets. I love balance sheets. You guys remember the first time that you put together your P&L and you printed it out of QuickBooks or your CPA sent it to you? You're like, what the heck is this? It was all over the place. Had to get cleaned up. You didn't know what it meant. That's normal. Remember you had to spend a little bit of time cleaning up your P&L? Well, guess what? You need to spend about the same amount of time cleaning up your balance sheet if you haven't done it. Your balance sheet tells you how much owner's equity you have so that you can calculate what your excess is. Another thing you can do if you don't have a good, clean, confident balance sheet is just, you're going to hear me say this a lot, ask your CPA. They can tell you what the number is. They can look it up for you. So let's talk through a hypothetical example just to kind of drive this thing home, okay? I'm going to stop my camera for a second, and I'm going to share my screen. You get to see my face here in a second. All right. Let's take a look at the little, so when we get all done here, Thomas is going to tell you how to get these templates, okay? These templates are available to you. You're going to be using these for a lot of the stuff we see today, that you see today. One of the things in this template you're going to download is called the draw calculator. This is really nice because I just drew it out on paper so that you'd understand it, but this is where you go to type the numbers in. So let's just do a hypothetical here, okay? I'll walk you through doing it. All right, so let's pretend my shop, my cost of goods sold in a typical month. So this is see, it says per month. This is a per month thing. So per month, let's say my cost of goods sold is about 100 grand. And let's pretend that my overhead is around 100 grand too. You get this out off your P&L and you're going to know, you're going to have to make these numbers for yourself. So right now we're living in Nick's world where this is what my shop's doing. I want to have 1 month of cash on hand. So that means $200,000. Now I got some upcoming expenses I want to plan for. Let's say I'm getting ready to buy some new widget that I can use to offer a new service. I'm going to budget $100,000 for that. And then, you know, the ShopFix, the good folks at ShopFix have been through this a lot, and they recommend that what you do for your emergency buffer is you take twice your monthly operating expenses. So 2 times 200,000 is 400,000 bucks. Now, different people have different tolerance for risk. Maybe 400 grand, maybe you don't have it, or maybe that's too much, maybe you want more. It's whatever you need to sleep well at night and to keep your business healthy. Later on, as we get further on, after you implement the Cashflow Foundation and you get control of your cash, we're going to teach you how to tighten this number up a little bit so that you don't have to have as much in reserves. You're going to be able to keep your reserves in another location so that you can actually get better access to your cash. But that's for another day. So this is how much I need for my business. Now, what does my business have? Well, let's pretend that I got a big old fat checking account. I have not taken any money out ever. I got 900 grand. That's like, for me in my business, that would be like 4 months of excess laying around I've just been accumulating over time. And I got a savings account where I've been keeping that 400 grand. This has been my emergency account. So I got $1.3 million in cash in my business, cash. By the way, the bank loves me because they love it when you keep a lot of cash with them. It's not good for you though. It's good for the bank. All right, so I got $600,000 of excess. That's a lot of cash. Now, what about this owner's equity thing? This is that number that I'm going to ask my CPA, where do I get this from? Or in my case, maybe my balance sheet is, I trust it, and I can go get my number. And let's pretend that my owner's equity is $825,000. That means I've accumulated $825,000 of profit. That means I got $600,000 ready for coming out right now. And by the way, I've already paid taxes on that $600,000. If I'm, as I mentioned before, if I'm an LLC, if I'm taxed as a C Corp, or an S Corp. If I'm taxed as a C Corp, I haven't paid all the taxes on it yet. So that $600,000, that's my money. I'm the owner of this shop. That's my money. And it needs to come out, because if I don't do that, that could somehow get locked up. Now let's talk about that $600,000 for a second. But before I do that, let me just pause. Take some quick questions before we go on. All right, no questions, great. So let's flip back over to my little camera now. We can get back to drawing. Stop my screen share.
I had a question.
That way we're big. All right, fire away.
Okay, well, just for typical shop size for shop fix, but would you recommend converting to an S Corp if you're a C Corp? Because my CP&A have talked about that, and we kick it around every year based on.
I can help jump in.
Yeah, so the question.
Oh, go ahead, Nick.
Go for it, David. No, go ahead.
Yeah, I think it's Vic.
Yes.
Your question, just to make sure I understood it right, you've talked about converting from an S to a C?
No, I am a C Corp and have been since I bought the business in 1998. So just looking at, would it be beneficial to convert?
Got it. It's actually a pretty complicated question. In a couple webinars from now, we're going to dive into that more so on a tax side.
Okay.
But if you want to shoot an email on it as well, we're going to address some of the questions off topic at the top of the hour on each of these future webinars. And I know this is a thing that a lot of people have asked about, so we'll probably do a separate write-up and send out an answer on that.
Thank you.
Thanks, David. Hey, another person, Henry asked a question about how we already paid taxes on the profit in the business. You know, a lot of you guys are used to paying taxes in April, right? That's not going to happen anymore. We're going to change that. We're going to be talking today about how to do quarterly tax payments, because what you don't know is you're overpaying your taxes by a lot. You're probably overpaying by 15% because you're paying in April. Okay, we're going to teach you how to do it right. You know, when you're small and you're not making much money, pay in April, it's fine. But when you're a business making the kind of money that you guys are making, you need to be making estimated tax payments. And so the reason that you can make the draw without a tax penalty is because you've already paid the taxes on it in your last estimated tax payment, or you're about to make the tax payment. Okay, so it's different. It's not like taking the money out triggers a new tax thing. That's not the case. And that's only true for if you're taxed as an S Corp or a pass-through entity. As I said earlier, if you're a C Corp, it's not quite that way. It's a little different. All right, so we talked about now let's get back to talking about, now let's go back to our little picture. So everybody remember that number there, $600,000? So I got a $600,000 draw that I can make. And all right, now we're looking at my screen again. So that $600,000, that's how much I have in excess. What do? Well, what I'm going to do is I'm going to write a check to myself out of my checking account. I'm going to write my draw, and we calculated the number for me was $600K. Okay, so I had $3,000 in my account. We're going to do this on a quarterly basis, okay? So I had $3,000 in that account from the quarter. I just added 600. So I got to leave enough space. So now I got $603,000 in this account. Wow. When's the last time in your personal account you had $603,000 sitting around? Well, what happens when you get $600,000 in your personal checking account? Well, if you're anything like me, you think about your wish list and all the stuff that you wish you had bought or want to buy. Yeah, I mean, come on. One of my clients, you know, he got $200,000 in his account from his draw, and he always wanted to have a nice RV. So what did he do? went out and bought it. Well, that's exactly what we don't want to do. The thing is that when you're not taking your money out of your business on a regular basis, you end up making decisions that are kind of like feast and famine. When you do this every quarter, what you do is you sit down with your spouse and you say, darling, we have $603,000. Well, we got to take care of the lumpy expenses in the emergency, but what do we want to do? So let's take a look at the right way to go about thinking about this problem. I'm going to flip back and share my screen. We're going to take a look again at that little, so this was the draw calculator. What you're going to do is you're going to go through this little template and then you're going to design what you need for your cash flow foundation. And one of the things you're going to have to fill out is your large cash flow needs. I went ahead and pre-filled this so you guys don't have to watch my fat fingers type. But here's what I'm planning out for the next 6 months. I got to pay my Q1 estimated taxes. By the way, that's due April 18th. I got to pay my Q2 estimated taxes. That's due June. I got to pay 150 grand on each one of those. I live in Texas, and in Texas, they like to charge you out through the nose on your property tax. So I got to pay 15 grand in property tax. We're going to go on spring break vacation with the family, 12 grand. That'd be nice. And I got to repaint the house. Okay. So I need $337,000 in the next 6 months. It's a lot of money. So $337,000. And by the way we do this, by the way, these are the instructions we're going to look at this again later. But one of the things you get to go through and figure out is how much you want to set aside every month for your lifestyle. My wife and I live on about $9,000 a month. So there we go. I like to have a buffer of 1 month. And then also my wife and I like to keep an emergency fund of 2 months cash on hand. This is all just a personal decision. You get to talk through this with your spouse and decide, which is great. So what you do is you get to figure out using this tab, your working capital. We're going to come back to this. This is going to help you figure out how much excess you have in your life. So let's just go through and do this. I already told you what my large cash flow needs are. So now I got to go find out what's my balance in my checking accounts. Does anyone know where you can easily go find your checking account balance? Anyone gone through and done this e-money thing yet? When you log into e-money, I got to tell them it's me again. When you log in with e-money, we're going to go look. This is my personal thing, my personal account. You go up to reports. It'll give you your net worth. It'll tell you what the balance of in all of your accounts is within the last hour or so. That's why you do this, by the way. The reason you do e-money, one of the best reasons, there's a bunch of them. The reason I use it is it's an easy place where I can go to get everything. It tells me everything. Here's all my checking. Here's all my cash. Here's my IRA. Here's my broker account. This connects to Schwab. You guys, half of you have done this, which is great. I just want you to know that this is where you go to figure out how much money you've got in all your accounts. Okay, I've got all my money in all my accounts. I can even see what my net worth is, which makes me feel really good. It doesn't really matter very much. So you go to e-money and you figure out what all your balances are. So let me type these in. So my checking account, I'm going to pretend I had $12,000. Now, by the way, I've been doing the family office account thing. Do you guys remember how much is in my family office account? And let me put up my picture again. See this number right here? $603,000. I'm going to put that right here. $603,000. Boom. Oh, I got credit cards. Yeah. Well, my balance on my credit card right now is $3 grand. My secondary credit card, I don't have anything. My monthly mortgage is $1,200. I got a car payment, $1,300. So I got $609,000 cash on hand. It pulls all these numbers from my setup, which is on this other tab we're going to go through here in a second. And it pops out the answer. It tells me how much excess money I have in my personal financial system. Let's take a look at this. Gonna flip over. There we go. So that $227,000. That's how much excess I have in my universe. And here's the beautiful part about this. I could go out and blow this. It's not in my checking account, by the way. It's in my family office account. So what I do is I sit down with my wife and I say, okay, the business has done well and paid us. What do we want to do with this $227,000? Do I want to put that back in the business? Because I'm thinking about hiring a new manager. Do I want to put this towards some new equipment to put back in the business? We always know that's a good investment. You guys always kill it on investing back in your business. But what if I want to upgrade my lifestyle? Well, that's a pretty strategic decision. Okay, how about this? What if I want to upgrade my future by saving? Hey, I want to save for my kids' college. I want to put something away for my retirement. Or I've got another business opportunity I want to get into. I want to go buy a house that I want to lease. I want to upgrade my future. But the whole point is we're now in a strategic decision. It's not about pulling out the money to go buy an RV. We're having an intentional decision about what to do with our money. That's what's so important and so powerful about this. It's not that the formulas are complicated. It's not that the spreadsheet is really whiz bang, gee whiz. It's about the way you think. It's the way you think about the money in your business. You take it out and then you use it to upgrade the other parts of your life. Let me pause for a minute here. Let's take some questions. We had some questions come in on chat, and I can tell some of you folks are scratching your heads saying, well, wait a minute. I'll pause for a few minutes here. I know you guys are going to have questions.
I have a question.
Go for it.
So when you talk about the 2 times your monthly bills, is that staying in your business account? Is that what you want to have in your business
Let me share my screen so I
account?
can answer your question. No, let me share my screen.
Okay.
There's 2 things that I kind of mixed together here pretty fast, and let's just make sure that this is pretty clear and sorted out. You got your draw calculator, and this is all about your business. It's how much do I want to take out of my business? And
Okay.
here we've got this 2 months of operating expenses. That's what Aaron recommends, and that's what ShopFix recommends is you keep as your emergency fund in your business. And
Okay.
that's fine. That's very conservative, and most businesses don't keep that much, especially when they got the cash flow that you guys do. But that's what ShopFix recommends. So you want to start with that. Okay, that's the right place to start. Now, just between you and I and the other 117 people logged in here on our little meeting, my
Okay.
wife and I, we also keep an emergency fund of 2 months of our living expenses. This is for the stuff like the air conditioner breaks, the refrigerator breaks, it's all that stuff. We just sleep better at night, knowing that we've got 2 months of cash in the bank, ready to go at a moment's notice.
Okay. So then would the first step then be to achieve that goal if you're not there yet before you start moving money out?
Yeah, that's a great question, TJ. And all of you guys have to kind of work towards this model. I'm going to flip back. I'm going to stop sharing my screen so that my other screen gets bigger. When you look at this picture and the things in it that you need to worry about, the first thing that you should be thinking about after you've thought about your business, you need to make sure your business is healthy. After that, you look at your family. What does your family need? Are you making enough money to live your lifestyle? After you've got that taken care of, then you look at your lumpy expenses and your emergency funds. And look, it's not like these are 2 separate accounts. This is just one big account. So this is the thing that you take care of after that. So number 1 is you take care of your business. Number 2 is you take care of your family. Number 3, you take care of this account. And then number 4, you invest in your future. Okay? Because you don't want to create stress in your life with your family. I mean, let me tell you, one time I overdrew my business and I actually missed payroll 1 month because I was expecting a big client check that didn't clear. And so I bounced a check, or I bounced payroll. I'm sure I'm not the only one that's ever done that. And I had to take money out of my checking account. And I think I took hell for that from my wife for 6 months. That was a major, major withdrawal on her emotional bank account. I'm supposed to be providing for my family and doing all that stuff, and I just totally blew it. So you take care of your family, then you take care of these other things.
Gotcha. Thank you.
Thanks for the question, TJ.
I have a question.
Go, Jeffrey.
That e-money website you have, I feel like that's something I should have already. Was that offered to me? Am I a step behind you guys? What was that about?
Yeah, you should have it as an email. I should have gotten invited. Hey, dude, I'm going to jot down your name, and we're going to make sure that you got an invitation to join it.
Okay.
You got to click a little button to set it up. And then what you do is you set up all your accounts by creating connections to your banks. You log in once, and it's going to automatically pull the information. If your
Okay.
bank doesn't offer that service, and some smaller banks don't, or you can't automate it, then you just got to do it manually. Each
No
month
problem.
you just go in, or you.
All right,
Thanks
we're
for the
all
question,
good.
Jeffrey.
I'm
Hey,
used to being a step
I've
behind.
got,
Thank you.
no problem. I'm going to jot down your name, Jeffrey, and I'll make sure that that we got you set up okay. What else we got before we go on?
I don't think I got it either,
Who said that?
Mike.
Mike. All right, Mike. Sorry, man. I got a screen full of 117 beautiful faces. So here's the deal. If you didn't get an invitation or you missing something, you can drop an email to financialfix@arcfinancial.com. We're going to send you an email. Don't write that down. We're going to send you an email after this to make sure that everyone's on our email list. If you didn't get an invitation to eMoney, then just respond back and we'll get to you as fast as we can. All right. So, man, we covered a lot of ground here. Monty, you got a question?
Yeah, I guess the big question is in step 4 here. Now, what do you do with that 227,500, which is really, the clean money that's really yours? How do we make that money work for us? And what do we?
Man, I love you. Thanks for asking that question. The answer is,
Thanks.
you come back in February, and we're going to tell you all about that. That's February's topic, man. What we did is we kind of have done this a little bit. We kind of figured out that the first thing we're going to do is teach you how to get control of your cash. And by the way, this is what we do with all of our clients, all of our families that come to us that are making the money where they get a private person like me taking care of them. We got to get control of their cash. And just so you know, it doesn't take 1 month. It usually takes a couple. Get this machine working. And once you get the machine working, then you can start to ask some really beautiful questions about what you want to do with this excess money in your life. You can start to look at this money and have a strategic decision about what's important to you and what you value. And again, this is the kind of thing, we're going to show you a methodology where every quarter you're going to do this. And the beautiful thing about this is the great opportunity when you follow our methodology to connect with your spouse. It's super important that you stay connected to your spouse on this kind of thing. By the way, I want to mention, if you ever want to have your spouse join you on these calls, feel free to do that. We welcome spouses. We know that you guys are a team of 2 people strong. So please bring your spouse if you want. Monty's already got his wife on it. Show your face. It's okay. You're allowed to be here. It's all good. All right. So now that we've talked about this topic, I wanted to raise something to your attention that is probably new to you guys, that super important that you get. I'm going to go back to the screen. Just a second. I'm organizing my papers here. All right. So we talked about the Cashflow Foundation. We got that. Now, let me tell you how people do this. This is how people who make a lot of money like you do this. All right. Here's the way it works. Oops. Every month, what you're going to do is you're going to take your paychecks from your business and they're going to go into your family office account. Okay. You just change where you deposit your checks. Okay. Super easy. And then what you're going to do is you're going to transfer out this fixed amount from your family office account into your main checking account to pay for your lifestyle. You know, today your paycheck just goes right into your checking account, right? This kind of imitates that. So it's really not a stressful change. It's just your money is going into this account first, and then it's going into this account. Okay. You're going to do that monthly. You don't really have to do anything special there. You set it up once and forget about it. Every quarter, you're going to start a new habit. Now, remember, we talked about at the beginning that wealthy people, one of the things that they have going for them is they have habits. And habits are powerful. We're going to get you to start a new habit quarterly. and you got to do this yourself. This is where, you know, when you make a little bit more money and you join our financial family office, we do this for you, but you get to do it for yourself right now. You're going to first calculate your draw. Then you're going to take the draw. You're going to write that check. You're going to deposit it into your family office account, just like this little story I told you earlier. You're going to open up that little Excel spreadsheet template that Thomas is going to tell you about here in a little bit. And you're going to update the tab called personal working capital. And then you're going to talk about what to do with that excess cash. You're going to invest it or upgrade. You're going to upgrade something. What is it going to be? Is it your life? Is it your future? Is it your business? I don't know, but you're going to upgrade something. And then you're going to rinse and repeat. And this is going to create the protection, because the business is not going to contain all of your cash. It's going to give you an opportunity to connect on your purpose for every dollar that your business creates, and you're going to love it because it's going to bring a new level of peace in your mind. And one of the things I want to tell you about, we ask our clients this question all the time at the beginning. What are you going to do with your money? You're earning all this money in your business. What are you going to do with it? Because the purpose of your gift, you have a God-given gift for running a business. And that money that you're blessed with, you got to do something with it. By itself, money doesn't actually do anything useful. You got to figure out what's the purpose. What are you supposed to do with that money? You got to protect that asset. And you got to figure that out. And when you figure this out, you get this as a reward. So this is the methodology that'll force you to go through and figure out that stuff. This is how people with a lot of money achieve that peace. Some people actually, it's not just peace, they actually use the word freedom. If you caught the Aaron on stage earlier this month talked about a book, Who Not How. Who Not How. This is a great book. It talks about the 4 freedoms that all entrepreneurs crave. If you haven't read that book, I highly recommend it. Aaron quoted it from stage, but you wouldn't have known it unless you had read the book. So this is what we're working towards. Now, we got to get into a few other small details that are real important, a little bit more of the mechanics of how this works. Do you remember when I showed you, here, I'm just going to share my screen and show you again. I hope I'm not making you guys dizzy by bouncing around, but all right, here's my spreadsheet that I want to fill out every month. Remember my large cash flow needs? Look at this, estimated tax payments. You probably, I don't know if you knew about this, but this is your new largest expense. By the way, today I told you about your new largest paycheck. It's called a draw. And now I'm telling you about your new largest expense, which is your taxes. We got to talk taxes because you got to plan for this. Everybody loves that big tax bill surprise they get in April from their CPA, right? All right, enough of that. That is not peace. That is not abundance. We're going to not do that anymore, okay? So we got to have a little lesson on taxes here. All right, in the US or Canada, we have this crazy system called pay as you go. That means when you earn $1, you technically owe taxes on it. Now, our government gives us a little bit of a break, and they let us to pay over 3 months. Within 3 months, you got to pay. And you're probably sitting there with yourself right now saying, what the heck is Nick talking about? I pay my taxes once a year. Well, actually, it turns out that your taxes are actually due every quarter. And you've probably been paying a special little penalty. I'm going to tell you about it and tell you how to avoid it. It's probably about 15%. So after today, you're going to save 15% on your taxes. Boom. Imagine what it takes to run your business grow at 15%. All right, so how do you pay taxes as you go? Well, first, we already talked about you have your paycheck, right? So we all know that when you do your paycheck, there's some money withheld, right? You've got this withholding of taxes. You see taxes come out of your paycheck, which is great. But what about these draws? It's actually not the draw that causes the tax. It's the profit that your business made. The government, when you earn profit, you got to pay taxes on that profit. Well, you got to make quarterly payments. And you're probably wondering at this point why no one's told you this, but let me explain why. And if you haven't listened to much else I've said during this meeting, this is definitely going to get your attention and perk your ears. You know how your CPA has you pay yourself an end of year bonus? If you have that, show me your hand. Let me see. How many of you pay an end of year bonus to yourself? You know what your CPA is really doing? Taking your penalty from all these payments that you missed, and he's calculating how much extra you need to take out of your business to make up for that penalty. And if he didn't do this, it would show up on the penalty line of your taxes. But because you paid yourself a big old bonus, you get 0 on the penalty line and you overpaid your taxes. If you're paying your taxes in April, you're paying about 15% too much. Wow, we got a lot of questions from that. So, your taxes are due January 15th, April 18th, June 15th, September 15th, October 17th, and then again January 1st. And here's the way you do it. The government gives you the opportunity to close out the previous quarter. So what was due on January 15th? Your Q4 estimated tax payment, or your Q4 business profits. In April, what's due? Well, you get a double special whammy in April. Look at this. You got to pay your delta of your 2021 tax payments. Everyone's doing that. But you also have to pay your Q1 2022 estimated profit taxes. Double whammy. June. Now you pay for Q2 because you just closed Q2 out. Here's the thing. Your CPA doesn't tell you this because they probably are thinking back to when you were making just a lot less money. So don't be fooled by this. You need to be paying your taxes every quarter. And what you're going to do in this Cashflow Foundation is you're going to save in your lumpy expenses. You're going to plan for this so that when your big old tax bill comes up, you're not surprised by it. You're just going to write the check. So this topic about how to pay your taxes is a big one. And how much should your quarterly taxes be? We just don't have time in this session today to go through this. We'll be talking about it a little bit later. So right now, the answer is ask your CPA. Ask them for your schedule, and they're going to give you a form. It's the 1040-ES. The form, and it breaks out every quarter what money's due, where to send it. You got to put a little piece of paper in the envelope with it. I think you can pay it online now too if you're willing to pay their little service fee or whatever. Get your CPA to tell you this. Okay? Get your CPA you need to start making these quarterly payments. Don't skip this. If you do, you're overpaying your taxes, and we don't want people overpaying their taxes. Man, just got a lot of questions. I hope some of you folks are typing your questions in because I see a lot of ARC people are coming to my rescue so that I can focus on, talking. Really appreciate everything, ARC, you guys are doing here to help me with this. Super appreciate it. Don't be fooled by this bonus. Don't do that. You're overpaying if you do that. All right. We got to move on to a couple of other things. So, you can see that this topic, this family office account, it drives the right behaviors. All of our clients get this. By the way, all the employees at ARC also have to do this because it's such a powerful thing. So how do you get this thing set up? It takes a little bit of time. It's not terribly complicated, but you're gonna have to put some time into it. So what you're gonna do, first thing you're gonna do is you're gonna get your e-money account set up because it's got some great little reports in there that'll help you out, that net worth report, like what I showed you earlier. And then you're gonna get this Cashflow Foundation template and a PDF. I'm gonna show you what that looks like. Oh, then what you're gonna do, I love this, follow the instructions. Okay, so the step 3 is get it. Step 2, get the template. Step 3, follow the instructions. Let's take a look at what this thing looks like. I'm gonna share my screen again. Share that bad boy. All right, we started off looking at the draw calculator. There's a tab on here called how to set it up. Y'all see this? Step by step, what you need to do. Boom, 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 just follow the steps. In addition, we made you a nice little PDF that's got a cute little picture on it that you can print out You want to write your institution in, write your bank account number, the last 4 digits of your bank account number, fill in these numbers, and take a picture of it. Because you're going to do this once a quarter. You're going to pull this out once every 3 months, and it's hard to remember. So here's the way you set this up. You're just going to follow the steps. So you're first going to design everything based on your accounts. Then you got to go set up the accounts. And by the way, this is just a checking account. Don't call your bank up and tell them that you want a family office account. They'll think you're crazy, or they'll charge you a lot of money. Just get another checking account. You can probably do it online at your bank, and make sure you get a checkbook. And then you got to sit down with your lovely spouse and have a conversation. Now, you're going to take a guess at how much you spend each month. Okay, you're just going to guess. You're going to put a number in what you think, and I promise you it's wrong. In fact, if I were you, I would have a little competition with your spouse, if you do this with your spouse, on who gets closer to the right number. It's always a lot of fun. Maybe you can win something. Maybe. So what you can do is, once you get e-money working, by the way, once you get all your accounts connected up, you see this little spending tab up here along the top? It's super cool. You can click on it, and it'll give you reports. It'll tell you how much you spent for the last 30 days. It'll show you the last 90 days. You can look at the transactions. You can download them into Excel. You could even set a budget if you really feel like an overachiever. You can even change certain accounts that you want to watch. Like, I just want to watch my credit card, nothing else. Okay, so this is a really cool little tool to help you get these numbers. What you're going to do, again, is you're going to guess at what your monthly lifestyle expense is. And then you're going to kind of put a number for what you want to have in your checking account as a buffer. And then you're going to decide what your emergency funds are. And then you're going to go list your large cash flow needs. You're going to make your best guess at that. And then step 4 is you got to fund everything and get all the money moved around to get it set up the right way. So moving the money around is the hardest part. Just take it from a guy that tried to do this on myself. Before you go moving money out of your checking account, make sure you let your spouse know. Okay? Otherwise, you might have a problem. So you're just going to fund the account basically the first month. What you're doing is you're putting all these pieces in place. All right, so that's what it looks like to get it set up. Now, here's what we're going to do now. Stop the share. Back to my camera. All right, now, I mentioned earlier that you're going to start a new habit. Turns out that today is the exact right day for starting this new habit. This is your new quarterly habit. What you're going to do on the first Saturday after your books are reconciled each quarter. Now, I don't know about you guys, but most of our clients reconcile their books by the 20th of the month. So what's the first Saturday after the 20th of this month? Hint, hint, today's Thursday. It's 2 days from today. That means this Saturday, you're doing this. You should do this. Now, the reason for Saturday is because if you're like me, you get up early before the rest of the family, you get your coffee, and you get some quiet time to yourself. That's when I do this. And we find that if you get into the regular habit, it works out pretty well. So you're going to calculate your draw using that tab in that spreadsheet. And then what you're going to do is you're going to write yourself a check for the draw. Okay, so we got that. So now we calculated the draw, and we've now written ourselves a check, and then we're going to deposit that check into our account. Now, I don't know about you, but I was not really able to deposit my draw checks usually through my phone. I had to take them into the bank because they were pretty big. So you might have to make a trip to the bank in the morning, maybe pick up some donuts for the family while you're doing that. And then in the Cashflow Foundation Excel file, what you're going to do is you're going to review the large cash flow needs. You're always looking ahead 6 months. You want to make sure you're looking ahead. You don't want to get any surprises. And then you're going to calculate the excess. Now, we call it working capital. That's the fancy word for excess. You're going to calculate your personal cash excess. Oh, there it is. You're going to identify your excess. You're going to figure out where your excess is. Like, is it in my checking account, my family office account? It could be a lot of places. And then you're going to make breakfast for your spouse. And when they get up, you're going to talk about what to do with that excess money. And then you're going to go do it. And you're going to upgrade something. You're going to upgrade your lifestyle. You're going to upgrade your future. And then just being a good Boy Scout, you want to always verify that the stuff happened that was supposed to happen. You want to follow through. This is your quarterly habit. You're going to get an email from me after this session that tells you to go do this Saturday. Now, that's your quarterly habit. Once a quarter. You do that in January. You're going to do it in April. You're going to do it in, July. This is your monthly deal. Now, monthly is a lot faster. All right. Going back to that screen, there's one little thing I didn't mention that we want to make sure to get right. Before I get there, I'm going to just walk you through this. You want to review the transactions of your family office account. Now, there's not that many, okay? There might be 5 in the month. You're going to log into your bank account, you're going to go to the history tab or whatever they've got, and you're just going to look at all the transactions, and you're going to do what we call a reconciliation. This is like balancing your checkbook. Remember, it's always good to balance your checkbook. You guys do this in your business all the time. You balance your checkbook. Well, what we're going to do is we're going to do a special balancing of this family office account. The last tab is reconciliation. You're going to put the month in. The first thing you're going to do is type in how much you put your monthly paycheck to be. Now, in our example, we did $10,000. I did a $600,000 draw. My wife gets paid twice a month, and she gets a paycheck of about $5,000 per. And then I transferred out $9,000 for my lifestyle. I had that $227,500, and I decided I invested it. So I put that over in my investment account. And I don't have any large cash flow expenses this month, so that was 0. So this is what the ending balance is. And then I type in what my actual ending balance is, and it tells me, oh, look, it reconciled. Good, so I got the numbers right. But here's the crazy part. The bank, I can look at the statement to see what the starting balance was at the beginning of this month and then at the end of this month. So this would be for December, by the way. I'd be doing this not for January. January's not over yet. Well, it is, almost. I'm sorry, this would be December. Started with this, ended with this. This is how much I spent on lifestyle, $11,000. This is to keep you honest. This is your checks and balance to find out, are you actually setting aside enough money to stay healthy? Because if this number just keeps going down and down and down, if you're transferring $9,000 in and your balance just keeps going down and down and down, then you're not transferring enough money in. And that's not going to lead to peace. That's going to lead to stress. So the last step that we do at the end of the month is we follow the steps of the reconciliation tab, and we reconcile this and we review the results. And then you make adjustments. By the way, you're not going to get this thing perfect the first time. You got to be willing to make adjustments, right? So you want to make sure to give your spouse a heads up. If you're single and you're not married, you don't have any other responsibilities, and great, you don't have to do that. But otherwise, you want to give your spouse a heads up that you're going to be making some changes. Just got a question about how much to pay yourself on a W-2 every year. I know that we get this question a lot. The answer is whatever a market reasonable wage is. Most of you guys are running pretty sizable businesses, so between 100 and maybe 125. Don't pay yourself more than $147,000. $147,000. You pay more than that, you're overpaying on your Social Security tax. So this coming April, coming taxes. Just a tip. Tell your CPA. Don't fire your CPA yet, because they'll be angry. You can be a little angry with them though, because they probably have been doing the end of year bonus thing. You want to file for an extension. This does not increase your chances of an audit, not even frowned upon. You're a business owner. You got a lot to do. File for an extension, takes the pressure off. Then your taxes aren't due April 15th. They're due much later in the year. Gives you time to get your stuff together, and it relieves the stress. Also, your CPA is cranking out tax returns for April, and they're just blowing and going as fast as they can. When you file an extension, you'll get more attention. File an extension. And then in April, you can come to the course. In April, we're covering taxes. We'll help you get ready for paying your taxes. We'll give you some things that maybe you could even do to get things in 2021 still wrapped up. Hey, good question about the draw. Let me get my picture back up. Someone asked a question about whether your draw should cover your lifestyle or your wages or your paycheck should. We generally, if we recommend that people use their paycheck to cover their lifestyle, and then they use their draw for the upgrade. Does that make sense? Get your paycheck to cover your lifestyle, and then use your draws to upgrade. And upgrading might be giving money away, investing in your future, things like that. Thanks for the question. $147,000 is your total W-2. You can just do a research like, hey, David, what's that called, the 147? It's not the efficient wage. What's the name of that wage?
What
Social Security maximum.
are you asking about? Which wage question?
Yeah, so what do you call that? This year it's $147,000. It's the Social
Oh yeah,
Security
that's the Social Security limit. So on your paychecks,
Yeah.
you're gonna pay multiple types of taxes depending on your state. But the big ones are, you've got a portion of it goes to Social Security, which is, I think, 6.25%, both on the employer side and the personal side. And then a Medicare tax, which is 1.45% on the personal side and the business side. And the Medicare tax goes forever. The Social Security stops at 147.
Thanks, bud. All right, before we open this up for questions, you're going to get an email from me after this. It's going to have this stuff in it, so don't freak out about writing it down or anything. But you know, we're meeting again in a month, and the reason that we've spaced these meetings out the way we have, it's very intentional. It's going to take you about a month to get your Cashflow Foundation working and to get your first draw settled. But when you come in February, we're going to be talking about how to make the decisions to balance your need between the business, your lifestyle, and your future. There's always trade-offs to be made here. And we want to help you learn how wealthy people make those trade-offs. And if you decide to invest in your future, what does that look like? So what you need to do between now and February, which you got a month to do this, take your family assessment so that you know where you are, upload it into your shared documents in your eMoney vault. You need to save it because you're going to take it again in 6 months. And you're going to see how far you've progressed. Log into eMoney and create connections to all your bank accounts. Add your accounts, get those suckers in there. By the way, not all banks offer this. So if your bank doesn't show up in the online login list, don't freak out, just manually add it and just put a number in there. Right after this meeting, well, I guess we're going to have Thomas describe either that we're going to send it out or you're going to be able to download this Excel template and the PDF that I showed you. So we'll get this, we want you to get this right away. And then this coming Saturday, here's the thing. Saturday, coming up. Follow the instructions in the templates. You got to put, and this is going to take you a couple hours the first time. It'll get easier after that. Calculate your quarterly draw, pay yourself, set up that account with your bank, and then deposit that draw into your account. It's your money. Go claim it. And then calculate what your excess is. And maybe add that sub-bullet on there, make breakfast for your spouse and go talk about it. And then after you do this, sometime you need to have a chat with your CPA. You need to get your estimated quarterly tax payment. Don't fall for the end of your bonus thing again. Get an email out to them, let them know you need to know what the estimated quarterly payments are, and just follow the instructions on the form. It's really simple. It's got an address where to write the check. It's got the deadlines on it, all that stuff. And then pay your estimated taxes, pay it. The first one, by the way, the one for Q4, it's already late to pay. Focus on the one coming up in April. So in April, you're paying for your Q1 profits, and also your 2021 taxes. Aaron talked about the pinch year. Well, get ready. Your 2021 taxes are going to come due in April, as are your Q1 profit taxes. Okay, so you might need to talk to your CPA and add up those numbers and make sure. You know, that's why you got to plan for those lumpy expenses, man, because they're coming. There's a tidal wave on the horizon. And then don't forget to add in those upcoming tax payments on your large cash flow needs. Super important. All right. Oh, man. You guys imagine going through this every month with us? It's going to be mind-numbing. You're going to get done with these little sessions, you're gonna be like, man, I gotta go take a nap. Why we recommend starting the day off with coffee and coming to this meeting with a full cup of coffee like what I do. So we wanted to intentionally leave about 20 minutes at the end for questions. We got a bunch of people on from ARC. You're welcome to ask questions about the stuff we talked about here. We welcome also other questions that you may have, especially in the text, even if you got something that wasn't covered today. Because what we're going to do is we're going to be sending you an email that you can reply to with questions. And then next meeting, we're going to start off the first 20 minutes. We're going to be covering questions that we couldn't get to today or that came in through email. We're going to try to make this as convenient for you guys as possible. All right, questions. Bring it.
I have a, go ahead.
Thank you. Can you show me on eMoney where I'm supposed to be putting in my retirement plan?
You betcha. Let me share my screen. All righty. Here's my e-money plan. I got a retirement plan. I think it's already added though. You go to organizer. Your retirement plan, you mean like your IRA? Yeah. Okay. Well, what you're going to do is you're going to go to your accounts. I just click on this little account button right here, that little link. And then you see this link over here that says add accounts. Click on that. And then if it's like Schwab or Fidelity or something like that, they got the logins already figured out. So then you just click on this, you just got an online login. And then you got to type your bank. Like, let's say you're at Fidelity. You just type in Fidelity and do a search. And it's going to go out and see which Fidelity bank it is, and you got to choose the right one. Like, it's probably Fidelity Investments. And then it's going to hop you over to the Fidelity website. You got to click on the little disclaimers. Yeah, continue. And then you'll log into the Fidelity website. Use your Fidelity login. And then after you go through this, I don't have a Fidelity login, by the way. What it's going to do, on your home screen, you'll see these. It's going to create your list of your accounts. And also, if you go to organizer, you can see your list of accounts down at the bottom. Oh, I'm sorry, this is just your people and your property. I like to go to the reports tab. This is where the report has your net worth statement. This is the best thing ever. You can see all your stuff listed out. That answer your question, Tina?
Yeah, that's fine.
You guys should just feel free to poke around. Feel free to poke around the money. There's a lot in there. You can set up budgets. You can do planning. You can do all kinds of crazy things.
I had to input a lot of stuff manually.
Oh, okay.
Because of credit unions, and so that's what I was looking at. Like, where do I put it manually? It came up with a cash flow. Can't remember what it said.
Yeah, let me show you how to do that, because a lot of people ask about, hey, my bank it's not connecting or something. When you go to add an account, let me go back to accounts. When you go to add an account, if you don't have a login or the bank doesn't offer this kind of service, you go to this thing that says, I don't have an online login to this account. And then it walks you through a little wizard where you can set up what it is, and it's manual. And I think I have one of those set up on mine. Let me go back. Let me go to my home screen. Then what you can do is you can go in, like, you can manually update stuff. Like, here's some of my property. Like, I've got this other business. So if I click on this thing, I just clicked on the link right there. You can come in and click on edit and update the values if you wanted to on a regular monthly basis. All right. Thanks for the question. Appreciate it.
I have a question.
Go for it.
On our family account, when we do the draw from the business to the family office, quarterly, are we taking in a draw for the taxes? Because, you know, I'm in S Corp, so I pay it personally. Because the way I've always done it is just like I took the bonus at the end of the year, paid the tax with the bonus, the money went to the IRS. So do I take that, when I take that draw, am I calculating in my estimated quarterly taxes to the family office and then write the check from there?
Yeah, thanks for the question. I think that I want to share my camera. I want to answer your question this way.
Okay.
The way that you figure out how much your draw is this. How much do you need in the business and how much do you have? And the rest is yours. The question is the amount that comes out as the excess, is that enough to cover your taxes? And the answer is, I hope it is. Otherwise, you have a problem. If it's not enough, so the amount that you're going to pay in your estimated taxes doesn't factor into how much you take out of the business. You're taking out whatever you needed to run your business minus how much you have in cash. And it's part of the template. Here, let's go back to that template too. I'll show you. So the amount that you're going to pay in taxes, that's exactly, you know, whenever you take money out of the business to pay for some expense, that's what we're trying to avoid doing. We're trying to take as much out of the business to diversify your risk as possible. So when you look at your draw calculator, it's got your cost of goods sold. Your tax payment isn't even on here. It's not even part of the equation.
Okay.
You just want to take as much out as you can without hurting your business and then upgrade some other part of your life. And you got to pay your lumpy expenses along the way.
Okay.
Does that answer your question, Bruce?
Well, the lumpy expense would be considered my quarterly tax, right?
That's
my
it.
tax
That's it. That's
liability.
it.
That
That's
would
what
come
it
out of my lumpy expenses. I guess that's what I'm saying. So I transfer my excess quarterly,
Yeah.
and put it in the family fund. And then out of that, I'll have to use some of that for the lumpy expense, which would be the tax liability in the
That's it.
first quarter, right? Okay.
That's it. So here's the funny part about this. I really appreciate your question. It was your lumpy expense, your largest expense in your lumpy expense category is your personal taxes. And your largest income is your draw. And you've probably never thought about it that way before, have you? You've always thought about this in terms of, I've got all this money in the business. What do I need over here to pay for? And that's the mind shift that we want you to, that's the change in thinking we want you to go through. Is it's not anymore about how do I fund my lifestyle with how much should I take out of my business to fund my lifestyle? No, it's the opposite. It's you take everything out of the business that's yours and you invest it in one of these other places to upgrade your life.
Well, that's always been my concern with this, how I transfer the money from the company to my personal, because that's where I want it, you know?
Yeah, that's where it needs to be.
And doing this yearly bonus, which I've done for 25 years, it just makes me sick thinking about it now.
I'm sorry, it was not my intention to make you feel bad, but I think everyone's going to find out the more of these monthly sessions you come to, you're going to be picking up stuff like this left and right. That's just
Well, that's absolutely,
this could fundamentally change your life.
That's unbelievable. That I should have been doing that all along. And I actually get those quarterly things in an envelope, but they never told me to do them. I said, just do the bonus at the end of the year.
Yep. I'm sorry.
I'm learning though.
Yeah, you know what's kind of fun is, you know, when you guys started your business, what you worry about? You worried about getting clients or customers in the door, making payroll, lines of credit. Well, you guys have new problems now. You're successful business owners, and when you get to that level, when you get to the level you're at, you get to tackle new problems, ones you didn't even know you had.
Yeah, for sure.
Yeah, Bruce, and to speak to what you're saying, you know, this isn't a good example of where, you know, a lot of professionals, not just CPAs, I mean, this is rampant across the industry, doctors, lawyers, et cetera. They go to school, they learn a set of procedures, and then they continue to apply that forever without understanding what the current laws and regulations would benefit you for. So that process of, if you've been doing this for years and years and years, honestly, prior to 2018, it probably made a minimal impact. It still wasn't a good idea, but now we're talking maybe about hundreds or maybe low thousands of dollars, depending on what your income was. But in 2018, when the Tax Cuts and Jobs Act happened, there's this whole other thing that we'll talk about later with 199A deductions, et cetera, that all of you benefit from if you have profit. That's what made that year-end bonus kind of devastating. So it actually essentially increases your tax rate by about another 10 to 15% by doing the year-end bonus.
Okay.
Can you please reintegrate one more time what that $147,000 W-2 form annually? My wife and I, we both have a payroll check from the business. Our total with pay W-2 form is more than $147,000. 147,000 should be total, or just each one of us could have 147,000, and why that's a threshold? If you could explain to me a bit.
Nick, I'll address it since I think they're referring to some of the chats that are in there.
Yeah.
So here's the
I'm also answering some of the chat.
Here's the 147,000 that I was talking about. There's a Social Security limit. Every year it goes up. It's adjusted to, I think, the Consumer Price Index now. Right now, the maximum is 147,000. All that means is that up until 140,000 of W-2, you pay the Social Security tax. Above that, you don't pay anything. I brought up that number to say, if your profits are very high, let's say north of 500,000, north of 400,000, or if you just have a terrible CPA and your profits are lower than that, and your CPA is telling you to pay yourself more than 147, I would just be skeptical. And the reason being is that there are very, very little IRS audits on the W-2 amount when it maximizes the Social Security limit. So that Social Security limit's 147,000. Now, that does not mean you should pay yourself 147,000 per person. I'll address that in a second here about as far as spouse versus shop owner, or if you guys are all owners, you know, how you pay yourself between them. You should pay a reasonable wage. So Stephen asked a good question earlier, and I kind of put it out there as a general rule of thumb, let's just assume that you've got a leader of your organization. This is going to depend on how many shops you have. But if it took a full-time leader to replace you $150,000 a year, and you only spend about a third of your time involved running the shops, which I know you guys are all in a different stage. Some of you may be literally fixing cars. I think most of you through Shop Fix have helped graduate past that. And maybe you're only spending a third of your time really on the business. And I'm not talking about a third of your energy. As entrepreneurs, we spend a ton of our energy, but a third of your time, then your W-2 wage should be 50 grand, a third of what that full leader would say. Now, if you've got 15 shops, a leader running 15 shops should be paid a little bit differently. And again, use that time allocation. You could do market studies and everything else. It just wouldn't really get hung up on it. So does that at least make sense on the 147,000? Any other questions on what that means?
So again, I'm gonna ask that question one more time. My wife and I should be total 147, below 147 together, or each one, whatever, regardless of what our total income profit is, should we keep it total or just each individual?
So each individual person should be paid a reasonable wage for their individual efforts. Do not get hung up on total. Don't bother combining them. It doesn't matter. So no person, in my opinion, should pay themselves more than 147,000 unless they're honestly probably working directly with us, because that's about when their income is necessary to start navigating above that. So for almost everybody on this call, if your income is south of $1 million a year, don't pay yourself more than 147,000 for each of you. Now, if your CPA is saying, hey, now, well, I know why some of you might be getting that advice, because your CPA is saying, hey, we put in a 401k plan, and for you to max out the profit sharing plan, you need to pay yourself $225,000 to maximize it. Stop it. We'll get to that later this year. Stop it. It's probably not a good idea. And if you find out that it's still a good idea, you can still go back the other way before the end of the year, but immediately no higher than 147. Now, as far as husband and wife, or as far as two spouses go, is in a business, you only pay reasonable. So if one spouse is not active in the business, or they're a 10th active in the business with their time, pay them that level. Don't equalize it. The only reason you're getting that advice is either complete negligence from someone giving the advice, or again, due to 401k plans. So when I see 401k plans as a driver, or SEP IRAs as a driver for W-2 wages, $20,000 is usually about the level where it makes sense to include a spouse on payroll and to maximize everything related to the 401k withholding. And so if you want to go on the safe side and your spouse is truly not working in the business, just cut their wage this year, and we'll talk about it later in the year as we address qualified plans, because that's the only reason why it would be a driver. Because you're just throwing, I mean, the more W-2 wages that you pay as a shop owner, given that most of you have a lot of employees, you're just throwing dollars away. In fact, it's about 10% of every dollar you pay yourself in a W-2 is going away. So for every $100, you throw away $10 for every dollar you do in W-2. Maybe that paid for everyone's financial fix for the year, or at least a hodgepodge.
What else you guys want to know?
I have a question about, so I've been an LLC for years. This next year, we're going to be stepping in, just recognizing as an S Corp. And so now maybe I'm more confused, because I understand as an S Corp, I'll be able to take a wage from the business as a paycheck, be able to pay those taxes will get paid on one end. Then of course, at the end of the year, the business will pay its taxes on the business. Is that, so in that regard, with what would be put away for quarterly estimated taxes, would that figure now need to be readjusted?
I would just ask your CPA. They should be capable of doing the calculation. It's probably going to be very close to what it was in the past, because you're likely not going to pay yourself a lot in W-2, and you're likely not going to withhold a lot towards your total tax bill in W-2. I know this is super confusing, but generally the way that it works, all of your income, whether it's profit in the business or paid as a W-2, all just goes into one big bucket, and the IRS doesn't really care if it was W-2 or profit. They're gonna tax it on ordinary rates the exact same way. And so my point, Ike, is that even though you were a single member LLC in the past, and now you've chosen to be an LLC taxed as an S corp, which was likely a good move, but don't everybody go change it all right now, because we'll get to it later on why you would or wouldn't do that. Your total income is going to be the same no matter what. It's just now you're going to split some of it between W-2 and some of it as profit, which means your total tax that you would need to pay to the IRS is the exact same over the course of a year. The difference is you're going to have a small amount of that amount coming out in W-2. So if your total tax bill is $100,000, you might have 10,000 of it automatically being paid along the way through your paycheck, but you still have 90,000 that's not. And that 90,000 should be split evenly between the 4 quarters.
So your CPA, when you're talking to your CPA, what they should be asking you is, how much do you expect to do this year? They need to be asking you that question, and you got to have a business projection. They need to also be asking you how much you're paying yourself this year. You know, you guys could change your payroll for yourself. Those 2 questions, if he's not asking you those 2 questions, he or she isn't doing the right calculation. They need to be asking you, how much profit do you expect to earn this year? And how much are you going to pay yourself? And of course, if you just change CPAs, they need to know how much you paid last year in taxes. They're going to ask you for your tax return from last year. But if you're with the same CPA, they've been doing your taxes for a while, they should have that.
Why do you recommend doing an extension on our taxes this year?
So
there's a couple of.
Oh, go ahead, Nick.
Go ahead,
I threw that. Okay, I put that into the chat. Yeah. So the reason being is twofold. Most of our clients we extend. Now, if you don't have any taxes due, or everything's fully buttoned up and your situation's simple, do whatever you want. You can file your taxes on time. Usually CPAs charge you like $100 per extension. The reason why we recommend extensions is just 2 pieces. One, it's usually a rat race to get taxes done quickly, and it is for your CPA as well. And I don't ever like professionals working on something under pressure and under a fast deadline. And so if they're getting your taxes fully out the door by March 15th and by April 15th, you are either their most favorite client and their largest client, or they have no clients, or they've rushed it out the door. And so that's always skeptical for me, because you're probably not giving them all your information until February, and somehow miraculously they get it all done by March 15th. That's skeptical. The second reason is that we're going to go over a lot of tidbits this year, you know, like we've already been kind of going over now, some of which might be how to actually read a tax return. I don't know if anyone on here reads their full 1040 Schedule A, B, C, D, E. But we're going to teach you how to do that and pill out some of the things that might be common mistakes or areas that your CPA might not know. And we're not going to get to that till later. And it's important that we don't get to that till later for other reasons. And so by extending, you're going to have time to review these tax returns probably for the first time in your life, and potentially catch some mistakes and errors along the way. Not saying that you should just extend and plan on filing in September for your business and October personally. We always recommend try to file everything by about June, July. That's usually the most stress-free time to do it. This is when the CPAs are the least busy, which means you're going to get the highest quality product from them, the most questions and answers from them, and give you plenty of time to review with quality.
Okay. Now, when you file an extension, you still pay them in April, don't you? Or does that extend the final to pay?
Yeah. No, you still pay in April. You still have to make the payment in April.
That's what I thought.
How do you know what to pay then?
Estimated
Do
probably.
you just do an estimate? Because we did estimates 1 year and have not done them since.
You'll just give all of your
in
information to your CPA like usual, and they'll give you a tax calculation. You just won't sign the return.
Okay, that makes sense.
Okay.
And let me put back up the on the camera. Let's just review real fast again the deadline. I'm going to stop my share so it gets bigger. This is the tax schedule this year. You can always Google this and find it out on the web. But this year, April 15th falls on, I think, a Saturday. So the 18th is the next day. And there's 2 things that are due. It's kind of the double whammy. You still have to pay your 2021 payment, this guy right here. You still got to pay this guy the 2021 payment, and you got to pay your Q1 estimate. So it's a month where you got twice the knuckle you got to get through. All the other months, it's just one.
Last couple of years, traditionally, every 2 weeks, I deposit to a state and federal account. Last year by October, my CPA called me and says, you don't have to anymore deposit. You pay all your taxes. I do it every 2 weeks, basically. This way, I'm not behind. Is that a good idea in your opinion, or should I pay it only quarterly, or what I'm doing is okay? What is your suggestion?
You're asking how often you should pay yourself a W-2?
Well, no, I mean, as far as the profit of the business, every 2 weeks, I deposit on IRS account.
Oh,
State account.
yeah. So you're basically asking how often to take a draw?
Yeah, I'm confused. Are you asking how often to take a profit out of your business, or how often to pay taxes into
Pay
IRS
taxes.
stuff?
Pay taxes to the federal as the state. I know you mentioned quarterly, but I've been doing it every 2 weeks.
Well, it really depends. If you really, really just love Uncle Sam and you just like to make him super happy by giving him free money, then pay it every day. If you don't feel that way, then I would recommend paying no later than the deadlines. And the deadlines are generally a day or two around April 15th, June 15th, September 15th, and January 15th. Why? Because our government makes no sense. Because if you notice those spacings, they don't make any sense. But those are the deadline dates. So your first quarter 2022 estimated tax payment is due April 15th, along with the rest of whatever you owe for 2021. And then the next one, June 15th, September 15th, and January 15th. So generally what I recommend is making those payments a day or two ahead of those deadlines and for the quarter, and not making anything along the way, because every day before that deadline is just a tax-free loan you're giving to the government.
And remember, it's based on the postmark date. It's not the date that they receive it. So,
well, it's true, but I would imagine a lot of you just go into irs.gov and select the toggle buttons.
Yeah, pay there.
Wire the money.
Yeah.
The fear I have is collecting that 3 months money, all of a sudden, when I have that account for taxes, if I open another account for taxes, my fear is always, there is always something comes up, and then you might withdraw from that money, and then later on regret, I don't have the money to pay my taxes. That's one of the reasons I do it ahead, because just a bad habit of spending it if you don't have no control on it.
Well, and that makes sense. Yeah. I mean, there could be a reason where, you know, if you have a leaky faucet in the home with the money, then sometimes it's better to go ahead and get it out of your own control. Hopefully we're teaching you guys habits that can kind of surround not just yourself, but your whole family in a way that can protect capital and drive it for most efficiency. You know, I think there's a lot of programs out there that try to overcome people's faults by either setting up 50 bank accounts for different things or envelopes or other things. These are all incredible ways to teach stewardship. And we've essentially taken all those concepts and taken it to the next level for entrepreneurs and said, hey, if we can take stewardship to another level, then you're going to be able to drive more efficiency, meaning not make tax-free loans, be able to get greater interest on your dollars, protect it from creditors, protect it from taxes and inflation, et cetera. So I'll leave that up to you and anyone else on the call. If you need to protect things from yourself in a certain way, then obviously do that. Don't let the tax tail wag the dog. But we're just, obviously going to usually teach on what's most efficient, assuming other factors aren't at play.
Hey, I just remembered, Thomas, need you to hop on for a second, if you don't mind, and tell us, how are these templates going to go out? Are we going to be using the website, or are we going to email them out? Do you mind sharing that with everybody, please?
Hey guys, absolutely. So the website, if you log in right now to shopfixacademy.com and you go to tools and resources, you're going to see a new section that's just for Financial Fix. It says Financial Fix templates, I believe. You'll click on that, and we've already uploaded the slides from today's call the written template for your Cashflow Foundation, and then the Excel workbook that that we've created as well. So those are in there right now, and we'll send out a link to that as well. But if you go in there right now, it's already uploaded for you.
Man, guys, we covered a lot today, didn't we? Look at this. We covered this Cashflow Foundation, this whole new way of thinking about cash, taught you how to take a draw from your business, taught you about quarterly estimated tax payments. This has been a pretty big month. Next month, come again with your coffee, because we're going to be talking about how to make those strategic decisions about that excess cash you have in your life. How do you upgrade your family, your future, other people's lives? This is where you start to live abundantly. I just want to also mention Financial Fix at artfinancial.com. This is a website you can write to if you have questions, if you need tech support. And also, we want to welcome your business owners. If you're in a partnership right now in your business and you're attending and your business partner needs to get an e-money login, drop an email to this email address and we'll get to it as fast as we can. And one more thing, we've been making these templates available. We're doing our best to take the tools and methodologies that we use inside our own business for taking care of people. We've been trying to put those into a way that you can get them. So they're not perfect, okay? So if you run into a problem, just send an email to financialfix@artfinancial.com. We'll try to help you out. If there's a systemic mistake in the templates, then we'll let everybody know. But for right now, they're pretty solid that we know of. We're doing the best we can to give you the best, highest quality content possible. And I appreciate your patience with that. Thomas, do you have any closing words for us?
No, guys, it was an awesome call.
David?
I just don't know if we got everyone's question answered. Is there anybody else that had a question out there? I know we were trying to do our best to answer them, but we may have missed one or two. So if you have one, now's your chance to say something. Otherwise, I think we'll sign off for today.
You guys did an absolute amazing job. I have a migraine now, but it's just, this is awesome because this is all stuff we wanted to do. And my husband's like, this is so overwhelming, and it is, but it's going to be awesome. So I just want to say thank you so much for letting Aaron twist your arm into allowing this to happen.
Thank you so much for that feedback. It really means a lot because we really want to do something that's going to be meaningful for all of y'all. I mean, we're really hoping that after 6 months and after a year, when you guys retake those assessments, that there's some visible progress on there. So who knows? Maybe we'll need to do our own version of a white chair on stage where we'll tell people what financial fix look like.
That would be cool. Yeah, so if you guys have any success stories next month, we want to hear them, because just so you know, the reason that we're advisors professionally is that we do it because we can affect the lives of the people that we take care of. So it means a ton to us personally to know that we're affecting your lives and helping you. So please make sure you pass those stories back. All right, well, I think that's it for today. If you get more questions, you have a way to send it to us, and we'll see you next month with bells on.
Thank you.
Thanks, guys.
Thank you.
Thank you.
Great job, Nick. Thank you so much. Thanks,
Thank
Dave.
you.
Thanks a lot.
Thank you.
Thanks. Thank you.
Thank you.
Thank you.
Hi, Lauren.
You killed it. It's so good.
I'll see you in a few minutes. We'll
Yeah,
have coffee
okay.
together.
All right, sounds good.
I got to clean up.
Okay. Awesome. It's so good.
See you shortly.
Bye.
Ring, ring.
Hey, Nick.
Yeah. Hey, Steven. How you doing?
Good. Hey, I sent you a email. I don't know if you got it about my little real estate deal. If you could give me like a 5-minute answer on that. that would be awesome. Just
Let me take a. Hey, I tell you what, I gotta vacate where I am right now. We rented a little studio for this. Did you send it to? Let me check to make sure that the email came in. I didn't read it because honestly, today we've been getting ready for this meeting.
it was
Let
within
me
the,
just pull up a quick thing.
I think I
Oh
sent
my
it,
God, all these people have written me. When did you send me this email, Stephen?
let's see here. It was 1 sec.
Did you send it to financialfix@arcfinancial.com?
Yeah, and it was like right after the meeting, like the day I got home, I sent it to you. Let's see. Oh yeah, I've sent it out on the 19th, and I sent it to.
All right, I'm not seeing it. Who did you send it to?
Sent it to connect at Arc Financial, but I can forward it back to this other address.
Yeah, forward it to Arc Financial at Financial Fix. Do you still see the email address on the screen in that green screen?
Yeah. Yep.
Yeah, send it to that email address if you don't mind. That would be better. Sorry, I didn't get it. I just been overwhelmed with getting everybody set up on e-money and everything. It's been a week.
Yeah, and that was the thing that came from your name, and I think everybody missed it. It was a very vague.
Yeah, well, what happened is it was I couldn't stop that it came from my name. That's just the way that the tool sends it out, and so I kind of got inundated with questions. But Financial Fix is the way. That's where I'm working all my stuff. So if you forward it there, I'll take a look at it. I'll be happy to take a look at it and give you a response.
Thank you.
All right, I'm gonna log off. I'll see you later. Have a great rest of your day, dude. Bye.